In this video, I'm going to teach you how to be a profitable trader. Legit, if you watch and truly listen to this entire video, by the end of it, you will be on the path to profitability. I have 4 trading rules that if you follow will point you towards the path of profitability. Rule number 1 is that you need to stop pretending that you know how stocks are going to move. Global investment bank UBS predicted that the S&P 500 index would be at 5150 by the end of 2024. And that's even lifting their original projection, which was at 4850. The S&P 500 index ended 2021 right around 5900. This puts them from even their updated projections about 13% off, and from their original projection of 4850 about 18% off, which is hugely incorrect. And guess what? This article from Reuters states that this UBS projection marked the highest projection among major global banks. This means that other major banks were even more wrong in their 2024 projections. You know hedge funds, right? The guys that are licensed investment advisors, the guys that almost always have their Series 65 certificate, which is observed by FINRA administrators, the guys that a lot of people give their money to invest for them. Yeah, on average, around only 27% of these funds have outperformed the S&P 500 over the past decade. 2 things I want to cover with this information. 1, you can still make money in the stock market. I'm going to teach you in the later rules of this video how that can be done. And 2, this isn't meant to call you dumb. You don't know what stocks are going to do. I don't know what stocks are going to do. Global banks and hedge fund managers don't know what stocks are going to do. So stop trying to live read markets and predict what the ticker is going to do. What I mean by that is stop just randomly coming into a chart here, doing some sort of analysis and going, oh, SPY is likely to go down over the next few weeks because it's made a handful of lower highs. Now, I don't hate technical analysis. I don't hate chart analysis. I'm actually very for it. What I mean by this statement is going to carry us into rule 2 that I want to cover in today's video, which is you need to prove an objective rule set works for a strategy in your backtesting. Let's continue to use the example of the line I drew on this chart to explain what I mean. So here I've done some quick analysis that SPY has made some lower highs. So I think that SPY is likely to come down over the next few weeks. Now, what is wrong with that initially is that I have simply just drawn a line and created a thesis in my head. That is going back to rule number 1, trying to pretend that I know what stocks are going to do when in reality, I don't. What you would need to do here is you would need to have a proven strategy with proven rules that you have proven provide you with positive expected statistics towards profitability. So instead, you could say something like, hey, if SPY creates 3 lower highs as it has here, I have pulled the statistics and I know that I'm going to have a 40% win rate on this idea being right at a 3-to-1 risk reward if my stop loss were to be above the initial high and my profit target were to be below the lowest low of this move. Do you see the difference in the strategy that I just described versus my initial thesis of drawing this line and expecting the markets to go down? I now understand the statistics and what is actually likely to happen from this setup based off of objectively defined rule sets that I have created for my entrance and exit strategies. Take a look at what's going on the chart behind me here for a more visual representation of this. This is a strategy that I have custom coded within thinkorswim. It is giving me buy and sell signals based on exact conditions that I have plugged into the strategy. And because I am utilizing this code to give me these statistics, these entrance and exit criteria, it is also working to automate the data gathering process of backtesting. So I've also now in Thinkorswim created this custom backtesting study that shows me the statistics of the strategy. Okay, this strategy only has a 31% win rate, but it averages win is $9,100, while its average loss is $1,600. That R&R versus that win rate obviously creates a profitable strategy, and it only has a max drawdown percentage of 7%, which is something else that I really like. So, do you see what's going on here? I'm not pretending that I know what NVIDIA is going to do from here. I actually understand that I have no idea. I don't know what NVIDIA is going to do on its daily chart from here as it's now trading at 135. However, I do know that if it sets up, in this case, if it breaks above the highest high value out of the last 20 bars and I enter this trade, that these are the likely outcome of that trade. Now, I just showcased code, and what that code does, as aforementioned, is it automates the data gathering process of backtesting. However, you don't need to use code to backtest a strategy. You can go through and find every example of an entrance and an exit according to your conditions, write them down, and perform the calculations by hand on an Excel sheet just like this. I actually did use code even to gather these entrance and exit criteria, but just want to point out code isn't required. What I will say in support of code, my shill for utilizing software in this manner, because I truly believe that making use of code in this manner can take a trader from being a beginner into being an actual trader, for lack of a better word. What I will say is that if you are by hand gathering the data of all your entrances and exits for your trade setup so that you can backtest it, that is going to take you so much time. Every time that you want to change a condition so that you can see if it performs better or worse, you're going to have to go back through and once again gather all that data by hand. Building profitable trading strategies and optimizing them to be as good as possible will take you months of time if doing it manually. Whereas if you utilize code, I now currently have a different strategy turned on. This is my reversal strategy. I have this one set up currently to buy stocks if they are above their 200 simple moving average and below 40 on the RSI, and I can see the statistics provided by those numbers, and then it sells when the RSI gets above 50. Well, if I want to change this and say, well, let's buy if it breaks below 45 and sell when it comes above 55, I can now go ahead, run this code, and once again, you can now see that the data statistics have automatically updated. The trades on the charts have automatically updated. I can go, oh, okay, well, that's a little bit worse. So what if we try 50 and 60 on the RSIs and hit apply? Let's see if this gets any better. Let's look at these updated statistics. Okay, now let's look at how it's performed on NVIDIA. Let's look at how it's performed on SPY. Let's look at how it's performed on McDonald's. Okay, we're looking at it on the daily chart. Well, let's jump into different time frames. How does it perform on the 5-minute chart? How does it perform on the 1-hour chart? And just look at now how quickly I can optimize trading strategies. I can just immediately change some of the input variables of a strategy and run that test and look at these statistics and figure out what variables are going to work the best, that align the best with my trading goals. This is going to take your strategy building and optimization down from potentially taking weeks, if not months, down to just a couple of hours. And I know now, moving into this part of the video, you're going to think, oh, Trey, you just told us how much you like code because you want us to sign up on your website and give you money. And hey, maybe part of that's true. I won't lie to you, but I truly do seriously believe in the power of utilizing code. This is what turned me into a profitable trader, and I genuinely think it can help you. And I built this business to genuinely help people. Am I trying to profit off of it? Yes, of course I am. I'm not going to like sit here and pretend I'm so like wholehearted and helping you out for completely free. Am I looking for some kickback? Yes, but you're going to get over 80 custom coded strategies, studies, scanners, etc. all for just $30 if you use this coupon code, and then $35 a month if you would like to remain subscribed and get access to the new editions that come in every single week. Also, if you would like to learn how to build these codes yourself, I also have a course that is it is exactly 36 sections long. Every single section comes with a video lesson and a text lesson. And by the end of it, you will know how to code in Thinkorswim exactly like I do. And I've been doing this now for over 5 years. You'll learn it all in a simple course. Yes, this is a little bit more expensive. I don't want to make my course super cheap or definitely not free, because if everybody starts building out codes like this, I'm probably going to lose my own edge in the market. So yes, sorry, the course is a little expensive, but hey, if you think knowing how to code in Thinkorswim like this could help you make an extra $300 over the course of your trading career, then the course is positive return on investment for you. So daytradingstrategies.net, click the link in the description down below. Go check it out, read the reviews, decide for yourself if it's something that could help accelerate your trading career. All right, so you don't know what stocks are going to do, and you need to prove objective statistics in backtesting for a trading strategy. But guess what? Backtesting is just backtesting. There are a lot of people out there that hate the idea of backtesting because you are simply proving that a strategy works on already existing static data. It's not actually all that useful in proving that a strategy is actually going to be profitable in real-time trading. That's why rule number 3 that I'm going to teach you in this video to help you hopefully start aiming towards being a profitable trader is to forward test your trading strategies. What you need to do is you need to make use of a trade journal like this one. I'm using TraderView here, as you can see the name of in the top left. I do pay $30 a month for this service. I'm a big believer in paying for things that help make me a better trader, that gar a positive return on investment. And I don't know exactly what I'm allowed to say here. Let me word it like this. This may be a tax write-off for you, so that's something to consider as well. But anyway, the important part is you need to journal every single trade that you take. And the very important next step of this forward testing is you then need to ensure that the statistics of your forward testing, so the trades you are taking in real time, are aligning with the statistics in your back testing. This proves that the back-tested strategy that you built is translating well into real-time trading. That is one reason why backtesting is still so important. It provides you with these baseline statistics of the strategy that you can then use to compare against your forward testing, once again, to ensure that the strategy is actually on the right track to being profitable over time. Because if you just forward test without having this baseline to compare against, yes, you could say, okay, the strategy is making money, but any strategy can make money over a short period of time. It could just be getting lucky. The market could just be very hot, right? But if you are back testing over a large period of time and over multiple different market conditions and gathering these statistics, if then your forward testing is once again aligning with those statistics, you know that this thing is on the right track to being consistently profitable, not just having a hot streak. And the second reason why back testing is so important before moving into forward testing is it's just going to save you, once again, months and months of time. Because I always say to consider a forward test viable, you should have a minimum of 50 trades in the test, probably even more than that. But statistics really only makes sense on larger sample sizes, right? If you've taken 10 trades and look at the statistics, that doesn't mean anything. So that can take a while, right? Trading very small share size, which is what I suggest you do when you first move a strategy from back testing to forward testing, is you trade very small shares before you obviously prove whether the strategy works or not, and then if it works, you can ramp up the share size. But anyway, it can take you a long time to gather the necessary amount of data to prove that a strategy is working. And if you're not back testing first, you're just going to end up running a lot of really crappy strategies through your journal. Back testing, at least, and yes, it's only on already existing static data, I get that, but at least you're proving that the idea is viable. Then you move it into forward testing and you prove it actually works. But you are going to have a much higher success rate on profitable forward testing strategies if you are back testing them first, which once again is going to save you so much time on your journey towards becoming a profitable trader. Now that you have proven statistics to suggest that a trading strategy may be profitable, my fourth and final rule for pointing you towards that profitability in trading the stock market is that you can never break the rules of your strategy. There can never be a dip that you don't buy when your strategy does because, oh, I don't like the look of this dip. Remember rule number one? You have no idea what a stock is going to do. Follow the statistics. The chart can't start to move up and you go, oh yes, I like this. Let me just go ahead and lock profits a little bit early. Nope, that is very incorrect. You should start thinking of your trading days as either good or bad based on either did you follow your rules or did you not. It doesn't matter whether you made money or you didn't make money. There are going to be days that you lose money. Every single trade strategy takes losers. But now that you have gone through all the previous steps I taught you in today's video, you now have statistics that suggest a strategy will make money over time if you follow it. You should be able to accept these losses. You understand these losses are built into the strategy. As long as you follow the rules, once again, and they have to be the rules of a strategy that you've proven works. You can't just make up random rules and follow them. That doesn't count either. But if you follow the rules of a proven strategy, you had a good day, whether you made money or you lost money. Where beginner traders tend to run into the biggest problem with following the rules of their strategy is actually the profit take side. Very often, a beginner trader will enter the strategy just as they are supposed to, and hey, the trade starts going in their direction. This seems like a really good thing. I mean, it is a really good thing, but what ends up happening a lot is a beginner trader. I've now turned on my continuation strategy. This is a different strategy, one that is once again available on my website, wink wink. But anyway, a trader will get into a continuation strategy like this, and it immediately, like in 15 bars, pops up 5%, SPY does. And they'll go, oh my gosh, this profit's so nice, I'm just gonna go ahead and lock it in. Even though the strategy hasn't sold there. The strategy doesn't end up selling until all the way up here, and it locks in almost 10%. So in this trade, the trader that exited too early only made 5%, and the strategy nearly doubled that profit in this trade. My least favorite saying among beginner traders in the stock market is you can't go broke taking a profit. Because yes, you can. If you are not getting the amount of money you are supposed to be getting out of your winners, they won't work correctly with the strategy in offsetting the amount that you lose in the winners. Because you're not going to cut your losers too fast. No one ever does that, right? No one's like, oh, this trade's starting to go against me, I better sell. No, you're not going to do that. You're going to hold this all the way down to the stop loss. So you cannot cut the head off of your winning trades. You don't know what stocks are going to do. You're not special. You're not smarter than UBS and every hedge fund manager in the world. Only trade proven strategies that you have proven through both back testing and forward testing and trade them exactly as you created them. Covered a lot in this video. I hope it helps you out. If it does, please take the half second, hit the like button. If you would like to continue learning, make sure you're subscribed to the channel. If you are interested in accessing 80 plus of my personal codes, check out the website daytradingstrategies.net, or of course, if you are interested in signing up for the course to learn how to build this stuff yourself. All of that over on the website, linked in the description down below. With all that being said, I'll catch you all in the next one.